Good morning, team. Another day in the market. Today is March 10th. Looking at the overall market, if we drop over towards the smaller charts, let's say towards a 5 minute, you can see the market has basically pulled back maybe $4 to $5 overnight. Are we surprised? Well, if you know how to read charts, shouldn't be too surprised. If we jump over towards the 1 year, I spoke about the 1 year MACD being crossed down, even though the 20-day and 180-day were crossed up. Not only that, we haven't broken above the 1 year trade line over here. So definitely want to watch to see how we're going to react today. Even though we're waking up down, that does not mean that we have to basically sink. So looking at the 180-day, you can see the 180-day MACD. I spoke about it in yesterday's video that the MACD was still underneath divergence, which is the bearish side. So even though we crossed up, the upside momentum is going to be a lot weaker as opposed to if it was above this basically divergence area, these green and red bars over here. So what we want to see is if we're going to hold below the 180-day trade line, in which we are right now, we're underneath the 180-day trade line. So we want to see if we're going to hold below that zone, because if we don't basically get above it, then we won't have any bullish action going on. So another thing is the 20-day has crossed down. It is testing that divergence area. Divergence can act as support, meaning this MACD can possibly break above it or bounce off this zone over here or sink into the basically the bearish side. So that's what you probably want to see if you want to be a little bit bearish today. Today, you want to watch pre-market lows, right? So pre-market low is 422.32 over here. So you can see nice pre-market low over here. So you want to watch that pre-market low for a possible breakout to the downside. So watch pre-market lows for a breakout to the downside. Once we break that 422.32, we could start basically going towards that 420 zone. So definitely want to watch to see if this happens, especially with the 20-day crossing over, especially since we're underneath the 180-day trade line. If you're looking for a bullish position, right, you think that, hey, the market's going to end up bouncing. You see the MACD start to basically bounce off divergence. The market's basically going up. Wait for confirmation of the break of the 20-day trade line over here at 424.55, and we could basically get back up towards that 427. And remember that 428, 429 zone is the 1 year trade line again, and which can act as possible resistance. So if you're looking at it over here, that trade line over here could act as resistance. That's where we are right now. MACD does look like it wants to cross over. If it does cross over, we could possibly even go up towards 438, maybe even higher, but we are right below it. Not only the 1 year, we're below the 20-day, we're even below the 180-day at the moment. 180-day has not crossed down yet. So if the 180-day does cross down, I think we may even see bigger lows since the 1 year's crossed down, the 20 days crossed down. We may even go down towards 414. So that's something to think about overall scale, but just think on the small scale right now. A few stocks we want to look at. Going to look at Tesla today. Looking at Tesla, you can see it's basically trying to push up. It rejected that 866 zone. We were talking about the breakout from that 851 towards 866. It happened yesterday, pretty good, and it rejected it as a double top. You can see it tested this level once, came back, tested again, couldn't break it. If it did break it, it would have pushed up towards 890. Now we want to watch to see if Tesla is going to get weak with the overall market, especially since the SPY is down. That could cause some weakness with the with Tesla right now. One thing Tesla has going for it, it hasn't broke the trade line. So watch for the break below 843 down towards 830, maybe even lower. Or if you want to look for some possible upside, you probably get a cleaner picture on the 20-day over here. So watch for the break above 850, and then we can start retesting that 865 zone again. Next one you guys are probably thinking about the most, Amazon. So Amazon announced a 20-to-1 stock split. Not only that, they're buying $10 billion back in stock. So that's going to be very interesting to watch. One thing about Amazon, it is very, very overbought right now. So that means the possibility for upside is a lot less than downside, right? So it's more possible for it to drop at this moment, especially since it basically had a $150 bounce, hit the SMA, you can see it put in a wick. That means that whenever you see a long wick on a green candle to the upside, that means, hey, that candle was stressing. It was trying to go to a certain price point and it could not hold it. And we could see that we're getting that same type of rejection on the second 4-hour candle. And we're even getting a red candle right now. So one thing you want to be cautious, the news is nice, but you want to have the confirmation behind the charts to go for those type of moves. So looking at Amazon today, it could possibly drop from $2,926 all the way down towards $2,884. Retest that trade line over here. Or if you want to see some possible upside, I think it would be wise to wait for that 3,020 for a retest of 3,090. So watch for that on Amazon. Next one we're going to talk about is USO. So USO, US oil funds, right? So it's an ETF. You can see oil prices are shooting up, causing everything else to go up. So it's only wise for us to possibly watch oil today. So watch USO. It peaked out at 87. RSI got very overbought. What's happening now? RSI is very oversold. So you want to watch to see if we get some type of bounce. Watch for the break above 78.68. And then we can start basically going towards like 82. 82 was a flat spot over here, some type of resistance. So watch for that 78 to 82. If we start coming back down, watch for that 75 for a retest of 73. Last but not least, we're going to talk about Chevron. So Chevron was a previous power runner. So whenever you see stocks that were running hard like this, I said, do not try to force no entry around this area over here. It was overbought. We're seeing a pullback. MACD cross down on the 4-hour. You can see the MACD cross down over here. So one thing we're seeing is that it's trying to find some type of support over here. That's exactly what we want to see. We want to see the stock find some type of support over here in order to have confirmation for an upward trend, right? So we have that rejection of the upward trend. We have the consolidation, and we need the confirmation for the upward trend. So watch for the break above 169.77. Then we could start going to 174. If not, we show some type of weakness. Watch for the break below 165, which was acting as support. And then we can start getting down towards 161, 160, maybe even lower. So other than that, there is a lot of news headlines going on today. The market just pulled back. So you're going to see stuff flying left and right on CNBC and other news outlets. So definitely want to be cautious. Watch the charts. We are having a little bit of divergence with the charts, meaning the 20-day is crossed down and the 180-day is crossed up, meaning we are going to get some type of choppy action. The only two confirmations we have is the trade line. We have the trade line. We need to watch to see if we're going to get above that trade line and the 20-day ends up trying to cross up or does cross up, then we could go bullish. And then we have to worry about the 1-year SMA, the 1-year trade line. If not, 28 crosses stays crossed down and the 180-day ends up crossing down with it. And we see like 414 and probably even lower. So be careful, use a stop loss. Hopefully you guys all have a green day. Hopefully you guys learned something. Like the video if you feel like you learned something. Share this video as well, and I'll see you guys later.